My name's Dave DeBow, founder of MoneyPartnerFormula.com, and this show is built for everyday real estate investors who are actively doing deals and looking to scale using other people's money. So if you're an active real estate investor and you want to get featured on this show to talk about your own real estate and capital raising experiences, then just go to daveinterviewsyou.com. Now let's get rolling with this episode, and remember to subscribe for daily interview content. Hey folks, welcome back. Today, zooming in all the way from India, we've got a very accomplished real estate entrepreneur who lives in LA, but she's visiting India as we're doing this interview right now. Rashmi Nigam has a lot of experience on both sides of the coin when it comes to investing in bigger deals. She's done quite a few deals as a passive investor on the LP side, and she's done deals as the active investor on the syndication side, actually not on the syndication, you self-financed, I think, most of your deals.
Yeah, I just did my first JV, so.
Hey, congratulations.
Thank you.
Rashmi, welcome to the show. Great to have you.
Thank you for having me here. Really looking forward to it.
So maybe give us a little snapshot of what the portfolio currently consists of as of April of 2026.
Sure. So going back to what you said, as an active investor, I invest in out-of-state deals. So that portfolio is largely in Arizona.
What kind of properties?
Multifamily, those are. And so I have about 110 units combined there.
Nice.
So that I actively
bigger
manage.
Multifamily, smaller ones? What
bigger, like 61 units that I've solely run, asset manage. And as a passive investor, I am now in about 7. We just closed 2 in the last basically 1 month. One was a JV deal and one was an LP deal. So I'm in about 17 deals now.
Wow.
And those are spread across different asset classes, different states, industrial, mobile, multifamily, build-up construction. I think you have to balance the cycle of capital and risk and stuff. So that's sort of how I approach that.
Okay. So at this point in time, a lot of people, and especially the multifamily space, they've gone through a bit of a roller coaster over the last number of years. Has that affected you very much on either the active or the passive side?
Oh, yeah. I think it's been the most painful, last few years. And from what I've heard people talk about, it's, the worst in 40 years we've gone through it. So as an operator, I've really felt it to be a game of whack-a-mole, right? You come out and you deal with a problem and bam, you get hit, then you go to another one. And a lot of the classic ones, right? Insurance costs have shot up. I have one of my deal, it went from 18,000 to 80,000. I mean, how you're supposed to survive with that and the cost of rehabbing stuff. And so, yes, it's been very, very painful. But as an operator, as an investor, I think it's been a mixed bag. There have been some deals that have been paying and that's still been paying. There have been some deals that have held off because they want to preserve the capital and be a little good stewards of it. Luckily, I want to say I haven't had capital calls. I know there's a lot of pain investors have experienced in terms of losing a lot of money. And so all of it. And so I haven't experienced that. I think part of that, I rely on a lot of my due diligence and my ability to just walk away if something doesn't make sense. I don't feel FOMO. I'm like, you know what? This is a long game. If I miss one deal, there are very few unicorns out there. They're very rare. So, they're all kind of operating in the same range, giving you more or less the same returns. I'm like, it's okay. I'll get the next one. And so I think that's been very helpful.
Now, in the information you sent in ahead of time, Rashmi, very, very interesting professional background. You've got a lot of experience in software and in AI. I believe that's what you're focusing on these days. Maybe tell us a little bit about that and how you've integrated that into your real estate business.
Yeah, so absolutely. I think, as everyone's starting to say now, right? AI is not replacing you. I think you just need it to be your second brain, but don't trust it, verify everything it spits out. What I do not use it for, or I won't, I'm kind of tired of looking at LinkedIn posts just written by AI with AI bots commenting on AI posts.
Generated
and it's just
stuff. Yeah.
It's weird. It's like, I thought it was meant for people to connect, but these bots are connecting. So I don't use it for that, although I occasionally might get, what's called a shitty first draft of stuff, and I pretty much stop there. So
Yeah.
there's that one thing where I really use it for a couple of places. PPM docs. I think documents are so painful to read, and especially, and the devil is in the details. Like you
Mm,
have to understand, what are your risks and what can go wrong and how bad can it go wrong. But when you're reading a 50-page document, it's painful. So I certainly use
yeah.
it to that. So I've built a lot of prompts around what are the risks and how bad can it be and what is the range, and then and then where to pinpoint it. So I think it helps me move through faster. Or
Yeah.
if it's painful, then I don't. So that's one place I'll use AI. I also use it a lot to keep analysis of the trends happening, not only
Okay.
within my building. So I'll take a look at it. I just feed in the numbers and I'll have it find out the first layer of, okay, you know what, your plumbing's gone up. Then I'll start digging in and what's happening, or your leases are coming up. And so, I think it's easy now because it's like you're talking to a friend, right? I'm having
Mm,
coffee with my AI model. I'd be like, hey, tell me how many leases are coming up. You can look at it. You can, filter and stuff. I don't want to. I just want to tell it to what to do. And then you be the person who makes a decision in the
right.
business. And so I
Yeah.
think you still own it, but you let it surface. The problem is AI is incredibly confident with the answers that gives, and you really have to be very careful with what it's telling you, and you have to dig in before you make big decisions. So that's one place.
So don't, you're saying don't even trust and definitely verify.
Yes, just absolutely. Just like people also, in a way, I feel like if you're
Yeah.
working with sponsors or something, just verify everything.
Right.
So I'll do that. I'll also look at the market factors a little bit, what's happening in my submarket or state, especially I think what a lot of us as operators have been caught up in is the oversupply in these markets. Nobody
Mm.
was looking at it back when you were evaluating deals 3 years ago. And all of a sudden, this new stuff's
There's
come
so
into
much
the
stuff.
market,
Yeah.
and occupancy's gone down. I mean, we've been, as an operator, before you would underwrite for 92% or 95% was a good way to look at it. And now, as an operator, I've been at 87% or 85. And
Wow. Yeah.
luckily, because my debt is fixed and there's certain operational levers that I was very careful about, that it hasn't messed you up, but it can, right? These are all the levers. And so you need to kind of see what's happening and what the rental markets are. So I kind of use it as my intelligence buddy too, a little bit. But,
Mm.
I don't have, a lot of people will talk about how they have bots running around and doing this and making calls. And I don't do that. I think I just use it for me, and I still own the relationship part of that business.
Hey there, if you're a capital raiser, a syndicator, or a fund manager, and you're looking for a steady flow of incoming accredited investor leads, then go ahead, grab a free copy of my new book, How to Get 20 Accredited Investor Meetings Every Month Without Cold Calling, Networking, or Chasing People. You can get that at 20accreditedinvestorsbook.com. Again, that's the number 20accreditedinvestorsbook.com. Okay. Yeah.
Um,
I know I'm tiptoe. I've been fooling around with ChatGPT for quite some time, and now I'm tiptoeing into the world of Claude because it's
yeah.
supposed to be able to do stuff for me and all that kind of stuff. It's a painful. It's a learning curve for dunderheads that aren't used to it. That's for sure. But
But you
yeah,
know what? I go back to thinking about it, right? When my father, probably when email came out, must have been the most terrifying thing for a lot of that generation. You went from having typewriters or having a secretary who was taking your notes,
yeah,
and you just adapt. And I think when email first came out, his secretary would be taking instructions on how to type an email, and then
right.
now emails, right? So we're just going through this phase of
Yeah, it's an
change.
iteration for
Yeah.
sure. And as the AI improves, it just gets easier and easier. That's for sure as well. So, Rashmi, before I forget, I got a couple of questions for you as we're wrapping things up. But number one is, which kind of came first, the whole chicken and the egg thing? Were you an LP first on the passive side and then got into active investing, or did you start as an active investor and then start doing some passive investing?
So very atypical path than most people, right? People typically buy their first home and maybe they move out of state or get a second home and rent that out. And They move
Yeah.
into LP and then they're like, oh, this is fun. I just jumped right in. And that too in California. So we just kept buying. Those are smaller buildings, but they were 6-unit buildings. So we just kept buying the block out.
Hmm.
And so I think being an operator first gave you an understanding of operations and risk management and just gave you that foundation on things to be looking out for. So did that as an operator. Then I started moving into an LP. And now finally, I think I've been operating and growing alone all this time. And I've closed my first JV deal. So that felt really special that I felt comfortable and I'm like,
Congratulations.
okay, I'm
Yeah.
ready to go. And so that's where I'm at.
Well, I think you're in a very good position, Rashmi, because you intimately understand things from both sides of the table, right?
Yeah.
As an LP and as an operator. So you know the questions and the concerns potential LPs are going to have. You know what good and bad reporting looks like. You know what good and bad management looks like, good and bad deals look like. So I think you're definitely in a very good place right now to be a good steward of other people's money and start
I
raising
feel
capital for your own
comfortable
deals. Yeah.
with
Yeah.
that. And I didn't want to take people's money till I felt comfortable with my own.
Yeah.
Like if I could trust my own money and treat it right, then I'm like, when people come to me, take my money, I'm like first and, I'm like, now I feel good about it. I don't want to start off with that. But what
Yeah.
I'm afraid of, what I've seen a lot, I don't like capital raisers that are not operators. I
Hmm.
feel like they're very great capital raisers and who'll get you the best deals. But I just feel like they promote stuff that just changes, right? A lot of capital raisers went from promoting multifamily and then they moved to the ATM funds and then now they're promoting private credit. And I'm like, who are you?
Yeah.
So I think I personally, when I'm looking at deals, I need an operator also who raises money, not just to raise capital raiser. I will not work directly with them.
Yeah, that's a good point. Very, very good point. Now, I know you're also very passionate about helping other women along the path of financial freedom and creating wealth. Tell me a little bit about that because I think you've got a whole newsletter dedicated to that, Rashmi.
I do. I was trying to figure out what I wanted my third act in life to be. And as like, I want to, have this knowledge. I've done a lot of stuff, whether it's private markets, angel investing, real estate investing, and I have all these successful women friends around me and we'll talk about recipes and travel and everything, but never money. And
Hmm.
it was such a taboo topic amongst all of us. So I was like, let's start. So I started a newsletter called shestacksup.com where
Nice.
I talk about stuff, not only just mindset, give them frameworks, give them metrics to look at, slowly just getting women to feel confident and just jump right in because it's very easy for us to manage millions of dollars of other people's money because we're good stewards of capital. But when it comes to our money, because we just haven't been trained or taught to feel comfortable to take the risk. So that's my third act. And I've been very passionate about it and I'm enjoying it.
Nice. So, Rashmi, lots of different people connect and watch this show or listen to this show. Who are you looking to connect with?
I am looking to connect with future JV partners, people looking to invest in real estate, and women who want to understand more about real estate and personal finance.
Very good. Rashmi, if people want to connect with you and maybe sign up for your newsletter, where should they go?
Two places. You can find me on LinkedIn, Rashmi Nigam, or you can go to shestacksup.com. And that's where my newsletter is, and you can subscribe there and see my articles there.
Shestacksup.com. That's a great URL. Nice. Rashmi, this has been great. Thank you very much for being on the show.
Thanks, Dave. Thanks for having me.
All right, everybody, take care, and we'll see you on the next one. Hey there, I really hope you enjoyed that episode. And as always, if you want to listen to more daily interview content, make sure you subscribe. And if you're an active real estate investor and you're doing deals and you'd like to get featured on this show, then just head over to daveinterviewsyou.com.